Hello traders, welcome back to Sir's Vlog and another episode of Weekly Watchlist. This week we had some mixed price action. CPI data was released and it was hotter than expected. To summarize the CPI data in their own term, what they said on their website is, in June, the consumer price index for all urban consumers rose 1.3% seasonally adjusted and rose 9.1% over the past 12 months, not seasonally adjusted. What it means that CPI data was quite higher than anticipated. So now with the current data, market is expecting a 100-point rate hike, and that will be declared in the next Fed meeting, which I assume by the end of this month, when we get the GDP data around like 28th July. So what's the reason for this strong hold, and what's the catalyst for the bull rally? Well, there could be many, but there is one more interesting thing that I found out is the movement in dollar compared to other indices. Both dollar index and main indices like Nasdaq and S&P 500, they have like an inverse correlation between them. So let me show you what I mean even before starting this week's watch list. So Dixie is the dollar currency index, and as you guys can see here, we were in a parabolic run, okay, from let's say 28th June till now. And if you see here, this is a daily chart. RSI and stochastic are turning bearish. Now, will that happen instantaneously going into the next week? No, it might take few days for it to turn completely bearish, but MACD is also started turning bearish, and that's the reason we are seeing, that's one of the reason that we are seeing the rally in the stock market. Now, if you want to see the bigger picture, let's add our index like SPY to compare the move. So if you guys can see here, whenever we get a drop in dollar, we get a rally in the stock market. Whenever we get drop in dollar, we get a rally. So this thing continues almost like all the time. When we start pushing up higher and higher, we get either mixed price action, choppy price action, or quite a bit of sell off in the stock market. So as you guys can see here, once dollar stop its bull run and start turning bearish, we started getting rally in the stock market, and that will continue, okay, going into the next week. Probably first few days that bull run will be a little bit mild, but after that, like once it start picking up the steam, once the dollar started moving more and more towards the downside, we get nice price action going into the next week towards the upside in regards to the stock market. Now there is one more thing that you need to understand, that we have a strong resistance around like 12.93%. If dollar comes down over here, I think it will get a rebound, and we need to see like what exactly it wants to do at 13.96%. Right now it is at 16.74%. So there is quite a gap between its current price and where it might bounce. So we just need to watch it closely, because if it start consolidating and started like losing its steam and start turning bearish very slowly, then probably it will come back to this point around when the Fed is going to declare next rate hike with GDP data, and at that point we will get a strong bounce in the dollar. Or if that doesn't happen, then we might break through this one, this 13.96% level, and come straight back down over here, which will be like a further decline in dollar, and which will give even stronger rally in the stock market. So just keep an eye on this dollar index and see like how it performs before initiating your trade, because that will give you the bigger picture if the rally will continue in the market or not. So this rally is definitely a pleasant one for the short term, but for the long term it's indicating the massive crash that might be coming next. Because if Fed decided to raise 100 point rate hike along with negative GDP data, that's not a good recipe, and it will create a massive sell-off in entire market. And why those two things are very important and their date by the end of this month is very important, because it might be possible that most of the major companies will declare their earning even before that, and that could be another catalyst for this kind of bull run. So be very, very careful. Now, that being said, now let's start with this VIX watch list, starting with the Nasdaq. For the Nasdaq, as discussed in my previous video, I said that we will have some room left to the upside, and it in regards to that, the previous level, that is 12,191.25 and 12,551.50 holds valid. I didn't change this line, these are there from the last video. So we need to see like what it wants to do. Ultimate goal is to be for Nasdaq to be around like 13,000 level, but to reach to that level we just have to cross these three levels, which provide like ample resistance for it to move up higher. Also, it is constantly in this channel, which is not good. It's still in the bear flag formation, so it might get a rejection from its resistance level. For an example, from when it reached towards this 12,551.50 level, it might get rejected. It could be the rejection and the pullback depends on the overall market situation, but as of now everything is turning bullish again. So for a short term, yes, we will get a bull rally. For a long term, more than 2 weeks time, you just need to watch everything to predict its next move. Pay special attention to RSI and stochastic and MACD, because this will give you the better picture, and always have them for the daily time frame. Shorter time frame will not be useful to predict its move for a longer period of time, like days and weeks. Moving on to S&P 500, it's also similar to Nasdaq, and it's retracting its 0.382 level of its recent drop right from 27th May to 21st June. So we are just hovering over there. Now if we get a breakthrough, we already got a slight breakthrough from this level, so we might push towards like 3896.25, and if we can break through and hold that level, then we might get a smaller pullback, retesting that level and bounce back again towards 4,000 levels. So these two levels, like around like 4,000 and the current level at 3896.25, these are the two important levels to watch for S&P 500's move towards the upside. Next one is VIX. With a bullish market, VIX is dropping further and further. Right now it's holding its 24 level, which is a quite support, but if we get a breakthrough that level, then we might see it retesting somewhere around 21, 22, and if we even couldn't hold that, then it will come down and retest this 20 level once again. Volatility is inversely proportional to the stock market, so if VIX is dropping, most of the stocks are flying. The first stock in our watch list is Advanced Auto Part, and it has rising wedge and clearly an uptrend, but this rising wedge is concerning because it's a bearish formation. So the key levels to watch are 192 and 197, because if as it start moving towards these levels, that this 200 level might be a solid point of rejection. And even like, let's say we reach to that point, there is a high probability that we will reach to that 200 point even just before its earning. And depending on their earning, if their earnings are good but the guidance is bad, and if they get downgrade from multiple analysts, then it will quickly drop down towards its previous level, somewhere around like 180 very quickly. But if earnings are good, guidance are good, then probably it can reach up to 215 to 20 level. Next one is Apple. Apple is a huge one, and everyone is expecting what they are going to project in their earnings, how their earnings will look like, because Apple weighs heavily in stock market. Okay, Apple's bullish or bearish moves, as it has some significance in respect to the overall market. It's still in rising wedge, as I said, with the other stocks, still in bear formation, and it is getting steeper and steeper. So I don't know like what's going to happen. It's already reaching to this 150 level, and if we can hold and crack through this level, then next level to watch for is 156.21. but this from 150 to 156, this will be a quite a move. And if they're earning, if let's say Apple reached to the 156 and their earning reports are not that good, and their projected guidelines for the upcoming quarters are not that good, then it will quickly come down crashing, and the next level for it will be around like 137. And if the earnings are not that good, then probably Apple will come down as low as $100, and that's a possibility considering the market condition that we have right now. Applied Materials, after a long time we are seeing something positive in the semiconductor sector. Applied Material has a gap fill between $99 to $101. So levels to watch for Applied Material is 95.97 and 99.74. I think we can reach to this level. Gap fill might be possible, but there is high probability that we will get a rejection from this when it reach to or start filling up this gap. Then we will pull back right around this 95 level, and if at that time if their earnings are good, we might get a bounce back. If not, then we have this 0.786 retracement of its recent move high, so we might come back close to that level, or we might retest this 84.55 level once again. Let me mark this over here, and that's good. Next one is AMD. AMD is bullish but still not looking that strong, to be honest, and I would like to see if it can hold that 80 level and what happens at that point. I still see that it's in rising wedge bearish formation, so if we can hold that 80 level, we can quickly get a move towards 83.51 and 87.04. Beyond that, everything depends on their earning, which is coming on 2nd of August. Next one is Amazon. Amazon recently had their Prime Day, so that could be a catalyst for its push higher. It also broke its downtrend, move higher to $117, come back, retest, bounce, got a nice bounce back from there with little gap to fill over there. This is a micro gap, so it's not that significant, but since RSI and stochastic and MACDs are like turning bullish slowly, we might get a push towards this 124-125 level, and if we can break through that level and hold that level, then we might get a nice push to fill this gap between 130 and 135. DIX sporting good. DIX has rising wedge. If it can break through this 89 level right around here, this 88.93 or close to 89 level, then we can quickly see it bounce back to 92.02 level, and above that 95 is the next level to watch. Considering its RSI, stochastic and MACD, the RSI and stochastic are clearly moving towards the oversold territory, so just be cautious over here, because it it may drop even further even before their earnings, and their earnings are quite a long, it has a longer period of time, like 24th August is not that close, it has like around like 1.5 months. So just be careful, watch these two levels, probably this third level if we get a strong push. Google split is coming this Monday, and I hope you are not swinging any calls puts, because there is high probability that it might get assigned, because when stock splits happen, everything goes crazy for a few days after it splits. So just be careful with that one. I hope you are not swinging anything. With the current price of the Google, 22.35, I think once that split happens, it will be around like 112 to 115 level, exactly similar to Amazon. And I think it will drop a little bit, like around 110 to 105 after it split. So just pay close attention to its price action, because after the split I don't know like what to expect. Probably it will do something similar that what Amazon did, because after the split I was expecting Amazon to rally a little bit, probably like 1 to 2 days, but that didn't happen. It started dropping instantly after it split. But right now market conditions are prime for upward moves, so we might get a slight drop towards 110 after it split, and then push back higher towards 125 level. Next one is Home Depot. Home Depot broke its downtrend channel and got a nice push, retesting it back again. It also has this small micro gap to fill, which it might fill on Monday, and after retesting it might retest this 290-98 level again, and if we get a strong push from that level, then we can see its move close to 300 pretty quickly. Just before its their earnings are coming on 16th August, quite a lot of time there, just watch out their move. Next one is Southwest Airlines. So watch it to fill the gap. It's already in the gap fill, but also in the bearish channel, so that's the other thing to watch for. It already filled this gap halfway through, so there is very little gap left from $39 to all the way 40.15. Also pay attention to this stochastic and RSI, they are heading towards the overbought territory. Also this MACD might start turning into bearish, like little bearish, so just pay close attention to that. Their earnings are on 28th July, so if we get a push to fill this gap, this is the right time, just before its earning. Now the other thing that I want to mention is that Delta Airways was the first one, I believe was the first one among the airline industry who gave their earnings, and their earnings were not that good. If you want to see that, let me go to the transportation sector, Delta Airways. So they missed their earnings by 16.60% and revenue by 0.49%. So it's quite significant considering the environment that we are in. So I'm not expecting something positive going into earning with Southwest Airline. Next one is Microsoft. Microsoft is looking bullish right before its earning, similar to all the other stocks. So expect it to move somewhere around 263 to 65. Break off this downtrend channel would be an awesome to see, but I don't think so that's possible. And if that happened, then we have like quite a good amount of resistance right toward here around 269 level, and if we can break through, then quickly we can retest to 75. Their earnings are coming on 26th July and dividend date is 17th August, so expect some bullishness in between these two dates, considering it's a Microsoft, so people will buy it to get that dividend benefits. And last but not least is Micron. Micron Technology is in wedge formation, and similar to I think it's a sympathy move because they recently had their earnings and dividend payout. So if semiconductor sector turn bearish once again, then this will get first move, because they had their earnings, they had their dividends, and they are also in the rising wedge or the bearish flag formation. So watch out for 62 and 66 level for retest and rejection. If we reach to 66, then, and if we get a rejection, then on the downside look for the 60 for its quick move, and beyond that 54 level for the next support. So that's it for this video, guys. Everything is turning green in the stock market, and for me, I'm seeing it as a calmness before the storm. I'm expecting a heavy crash after we pass through this earnings phase, but as always, time will tell what's going to happen. Please subscribe, and if you like the content of this video, please hit the thumbs up button, as it takes a lot of time for me to prepare this video. Once again, thanks for the watching, and see you guys in next week's video. Bye.